All right, we have more changes unfolding in the U.S. economy and with the future of the U.S. dollar. Changes that have some of the largest U.S. banks coming out on Friday and sending a not so subtle warning about what to expect post-election. Regardless who wins in November, they say start preparing for U.S. dollar debasement and reflation because it's coming. Regardless what Trump does or even what Kamala does, which I'm not so sure about. I think he can fix it. I think it can be stopped. After his Joe Rogan interview, he said something interesting on that 3-hour podcast. It was only 2 sentences, which I'll play later in the video, but it really captures the way he views our national debt, which is what this all comes back to. The source of all of these problems is the excessive government spending and buildup of our monumental pile of debt, big government. Well, wait till you see what happens after the election. The markets have been hedging for this scenario for months now. But before we get started, thank you for liking and sharing these videos. It really helps out the channel. And consider subscribing so you don't miss these regular updates. So the U.S. banking collapse is coming, folks. It's been bubbling under the surface for months. And BRICS in Russia last week, meeting with heads of state from China, from India, Saudi Arabia, South Africa, and 17 other nations, Vladimir Putin and Xi Jinping working toward this for years, this shared goal. Putin and China working on this project for decades now to dethrone the US dollar. That's what this summit was all about. Russia and China building this new global payment system to defeat the dollar, to neuter the US government's ability to issue sanctions. Corporate media, of course, highlighting the trade deals and diplomatic relations side of the summit. But make no mistake about it, people. This meeting was all about dethroning the U.S. dollar, cutting off the U.S. government's ability from issuing sanctions, about protecting themselves, these other countries, against a U.S. administration that can single-handedly cut off 70% of trade to another nation, arbitrarily with the swipe of a pen, which we currently have the ability to do, between the power of the US dollar being the global reserve currency, combined with the SWIFT payment system, which is overseen and controlled by who? The central banks of the G10 countries. It puts the US as the preeminent world power. Hands down, regardless how big China's economy gets, the power still resides within the United States. Hence why this meeting was so important, getting close to now figuring out how they can settle those transactions using the new BRICS currency. And once it's ready, it changes everything. The BRICS nations are over 30% of the global GDP and something like half of the world's population. They're basically the silent majority. It's why the big banks and big money investors are hedging for this scenario. US dollar debasement is happening. It's been happening. And the timing of this is critical. Russia, China, they've been waiting for the right moment to swoop in and roll out this multi-decade project because the United States just hit $35.7 trillion in debt. And month after month after month, a new country signs on to the BRICS initiative to ditch the US dollar. Then last week, while the BRICS nations are having this major conference, right, the Fed releases their projections for U.S. interest payment expenditures next year. Wait till you see this. They released this data last week on what they project we as a nation, we as a country, will spend on servicing our national debt. A chart that'll just make you stop cold in your tracks. Take a look at this chart. This is the federal government's expenditures to service our national debt. Harris Biden are now spending over $1 trillion a year on interest. 1.1 trillion they spent this year on interest alone, not paying down the debt, that we owe, just the interest payments, 1.1 trillion. In the last few weeks, they borrowed an additional $450 billion. That's almost $500 billion more just to pay the interest we owe. Think about the logic in that. You're Janet Yellen, Treasury Secretary, knowing the Fed is in the process of cutting rates. You decide to borrow another $500 billion in long-dated treasuries. Why not auction off only one-year notes or short-term notes? She decides to do a 20 and 30-year auction. So we're now stuck paying that $450 billion off at 5% for 20 or 30 more years. It's infuriating. Then the Fed releases their projections for next year, how much we're looking at in interest expense, projecting it's going to be even higher than this year, between $1.2 to $1.3 trillion next year in 2025 on interest, depending on how quickly they can cut rates. Look, it's almost as if they're trying to sink the ship, folks. Gold now surging at all-time highs relative to global equities for years, for decades. Gold has been all but forgotten, purposely held down as an asset class by Western central banks. Somebody big is now buying up the gold market, folks, driving gold higher. Russia, China, Saudi Arabia, all now buying gold like it's going out of season. They are preparing. And according to B of A's chief financial strategist on Friday, he wrote this in his client note: the biggest picture, gold testing all-time highs versus global stocks. Investors are now starting to chase biggest weekly inflow to gold funds since July 2020. Wait till you see this. He's saying we are bullish bullion, but disorderly move up in gold and bond yields on election would reverse bull in Goldilocks. You can see this in where the big money's flowing. Look at this. Investors moving to cash, biggest inflow in 4 weeks, and gold. Last week, gold saw the biggest inflow since July 2020. This was during the height of the Cove, when everyone was panicking. The money that's flowing into gold right now is unbelievable. I pointed this out, by the way, on Twitter, on X 2 months ago, when gold was around 2,400 an ounce. If you're not already following me there, you should. Now, can this be stopped? Can Trump be elected and turn this around? Personally, I think he can, and I'll explain why in a minute, but the banks don't think so. Wall Street does not think so. They are betting, regardless who wins next week, that this trend continues. And why is that? It's because Trump is a business guy. He thinks about the U.S. economy, about the United States as a country, like it's a business. He said something on the Joe Rogan Experience that stuck with me. He said this. Take a listen.
You know, if you viewed this $35 trillion right now, it's a lot. But if you look at the asset value, if you looked at it purely as an asset value, we have oil underground, we have water, we have mountains, the assets are so enormous. But regardless of that, we've got $35 trillion in debt, we should pay it off. And we would have started paying off debt and probably even given further tax reductions. I want to get it down to 15%. We're going to do more business. But when you get hit with a COVID, everything stops and you have to keep these businesses alive. The businesses were dying. The word growth is actually more important in a way, because you could have the same debt, but if you doubled your growth, all of a sudden you're under-levered. But still, we should pay off debt.
That is something you never hear another politician say. That's the thought process of someone looking at the country like it's a business. Growth, the word growth, is actually more important because you could have the same debt, but if you double your growth, all of a sudden you're under-levered. He's a real estate guy. That's how it works in real estate. If you have more income coming in from your units, all of a sudden you could borrow more money. You could refinance with more money. Then looking at our debt compared to our total assets, he says, saying it's minuscule in comparison. Now that makes Wall Street nervous. This is why they're trying so hard to take this man out. He is literally bucking the system. He's planning on running the country, not being a figurehead, but actually running the country. And he has his own ideas, planning on using massive tax cuts, regulation cuts, and tariffs to solve our fiscal problems. And he even floated the possibility of eliminating income taxes altogether. Think about that. And he believes it. He thoroughly believes he could do it. How Kamala is even competing blows my mind. And here's the worst part. The Fed, with the banks, have been playing this waiting game the last 2 years, kicking the can down the road. All of this depends on the Fed's soft landing outcome. If the Fed can continue to cut rates like they've been forecasting and planning to do, because don't forget the banks are holding on to close to $1 trillion in unrealized losses. Holding it off as long as possible with this accounting gimmickry, moving their fixed income investments between available for sale to held to maturity, all depending on the Fed to rein in inflation and bring down interest rates. Otherwise, it's game over. Should we see a period of reflation where the Fed can't keep cutting rates, instead they're forced to hike rates again, it's game over. Remember what happened when the Fed cut rates 2 months ago? In September, interest rates jumped. The last 2 months, the 10-year Treasury yield has been climbing. It's why B of A's Hartnett said everything holds unless one of two things were to happen. Either A, recession comes, where payrolls are less than $50,000 a month, equals retreat from stocks to bonds. Or B, an election sweep were to happen, and inflation, payrolls is greater than 250,000, causing Fed to hike, not cut, and reverse the gold tech leadership. And for the record, a GOP sweep scenario is now the most likely outcome for the U.S. election. I don't know if you saw this. Look at the difference between October 8th to October 17th to October 24th. A Trump sweep where Trump wins and the Republicans win both chambers of Congress. It's now higher than all other election outcomes. It's according to Odds Checker. So yes, everything is riding on next week. 7 more days, folks. All right, that wraps up this episode. Like, subscribe. We'll see you next time.